Some retail investors using the market sell-off earlier this week on Monday as a reason to buy, scooping up some of this year's most popular trades at discount prices. Here with an inside look at some of that is JJ Kinahan. He is CEO of IG Group North America. JJ, it's good to see you here. So I think a lot of people are trying to figure out just what the read is from the retail investor, where exactly they're seeing the opportunity. What are you seeing in your data?
You know, it's interesting coming off that report talking about the technology stocks. One of the things that we see when retail investors get nervous normally is that they'll go to spiders and SPX and index type ETFs or the indices themselves. What was interesting in this down move is we didn't necessarily see that percentage of trade increase as significantly as we normally did. In fact, what we saw was many, as you just said, using this as an opportunity. And it's always interesting to me that every crisis, so to speak, we've had over the last 5 years where retail traders tend to start are two technology names, Apple and Microsoft. They have great cash flows. People trust them. They pay, decent dividends. And once again, we saw those be the first two places our clients went to when things turned tough and look for. The other stock I found very interesting, an older school name, but a stock that's performed very well, Coca-Cola. So those three were sort of the names that led. Apple and Microsoft are going to be names that retail trades significantly anyways, but made up a larger percentage of trading on Monday and Tuesday for sure, as people were looking for places to go buy.
What activity are you seeing in Intel specifically?
On Intel, our clients have cut back on it pretty significantly. And in fact, Intel, I would say right now, normally you have a little bit of a buy bias for retail traders. They're normally buyers of about 52%, sellers of 48%. It's actually a pretty even flow. But what we're seeing in Intel is a little bit of the opposite. The selling activity is outweighing the buying activity. You're actually seeing about 55% sales, 45% buys. Little bit unusual, but for retail activity, that's actually pretty bearish, to be honest with you.
JJ, what are you seeing outside the tech trade? And I want to bring up REITs and some of the opportunity within commercial real estate, because Maddie and I were discussing yesterday, we have been getting questions just about the opportunity there, especially the fact that they pay a dividend. Are you seeing a bit more interest there?
Well, it's interesting for longer term holdings. Yeah, you see a little bit. I'll start with. I'll break it up into two areas. Number one, if you look at people who play it, they often play it through the ETF IYR, which has actually done very well. And having a day today where it's off a little bit, but done well throughout this bit of crisis. But the two names where retail really goes to in the REIT space are SPG, Simon Property Group, and IRM, Iron Mountain. Those two stocks, if you look at the chart over the last month, it is straight up to the right. And the reason being, all the talk of interest rates coming off helped their businesses significantly. And so people who have been investing, our retail clients who have been buying, have done fairly well on that. The other thing, they both tend to pay very steady dividends. And we just saw Simon Property Group for the third year in a row increase their dividends, now yielding above 5%. So that's why people also like it for a little longer term play. I think the real key in that space is going to be, with interest rates, what happens to the cost of labor and equipment. We see that to refinance, et cetera, looks like it's going to be cheaper, and that's needed for a lot of the malls and the larger commercial real estate. But is it going to be affordable for these firms now to rehab these spaces? Because that's where the next competition is going to be. As you guys see every day where your office is at, a lot of these older buildings trying to refurbish, make it much more appealing for people to get back to the office. And I think you're going to see a lot more of that continue in the mall space also. So can they afford to do that? But I think the really big thing is if you look where loans are due, there are a lot of loans due at the end of this calendar year. So the rate cuts, if they do start to come in September, couldn't come at a better time for a lot of the refinancing action that's going to have to take place also.
All right, JJ Kinahan, IG Group North America's CEO. Thanks so much for joining us.
Thanks, ladies.